been quite a day.
It's been quite a week, in fact, and quite a weekend. Let's not forget that 61% of Greeks who went to the polls this weekend voted no to austerity. They sided with the Prime Minister, Alexis Tsipras, and rejected the offer that ostensibly was on the table from the Europeans.
He seems largely unassailable at the moment. His main political opponents have all stepped down today. We've seen Venizelos go, we've seen Mr. Samaras step down as well. A real changing of the guard here as well. And the Finance Minister, Mr. Yanis Varoufakis, also deciding he's going to depart too.
Yes, and in his place, in all likelihood, will be Euclid Tsakalotos, who is an Oxford-educated economist who is familiar to the European creditors. So perhaps there is some room for optimism, but let's be clear, very little room for optimism. At this point, it's up to the ECB. If the ECB does not throw a liquidity lifeline to the Greek banks by the end of today, if not tomorrow morning, it is highly unlikely that the government's promise that those banks will be open will be met.
Financial markets have reacted fairly calmly, and
this is perhaps the most surprising result to some of the weekend.
In one way, I can understand it, in as much as you have a changing of the guard here. You maybe have all the political parties largely positioned for a deal, i.e. we now have a situation where Greece actually probably internally is all moving in the same direction. Maybe that's the reason for it. Maybe the fact that Varoufakis has gone, I don't know. Whatever it is, they're reacting pretty calmly. We don't seem to have the panic at the moment.
That there was no reason to worry in the first place. I do want. This is something I've been waiting to say all day long, Guy. I do want to point out that on Thursday and Friday there were all kinds of doomsday predictions about what would happen to financial markets in the event of a no vote here in Greece. The no vote was far more decisive than anyone could have imagined, and yet the damage from a market standpoint is even more contained, perhaps, than almost anybody might have imagined.
Yeah, we saw the euro-dollar gap lower first thing this morning. It went below 110, got down into the 109. Since then, we've popped back up, and equity markets taking it incredibly well.
Yes, we have seen U.S. equity trading recover, at least losses in U.S. equities, have narrowed to the point where it's almost flat for the day. There was an initial bid for bunds and for treasuries that has backed off too, and so we've seen the prices, drop and the yields. I wouldn't say pop back up, but they've crept back up to where they were earlier in the day.
And it doesn't feel like so. Last Monday we were standing here, and you saw equity markets really falling out of bed. Today, completely different. Are we getting immune to this? Is it just the fact that we've been talking about this for so long that people are now getting to the idea that this is just going to be a process that we're going to roll our way forward?
Yeah, I think you're onto something.